Welcome to today's Canary Report. Markets are broadly bullish with healthy breadth as investors digest a fresh wave of AI headlines, alongside some spicy comments from former Fed Governor Kevin Warsh about whether this bull market might be under threat. Let's see what our canaries are telling us. The spec leaders are all in the green today. ARKK up 0.87%, SPHB climbing 1.33%, MAGS gaining 0.58%, XLI up 0.87%, and XBI ticking higher 0.4%. This isn't a one-sector phenomenon, it's broad speculative participation. The news cycle is heavy with AI positioning stories. You're watching AI headlines daily, and 3 tech ETFs that could bounce back after the AI sell-off suggest retail and institutional money are still finding ways to layer into the narrative. Speculators aren't just watching. They're riding this wave, which means we have conviction on both sides of the room rather than a capitulation pattern forming. Credit is remarkably stable, high jumping 5.44%, HYG up 0.33%, and HYGW gaining 0.24%. When you see yield products like this all moving positive across the board, it tells me there's no stress in the underbelly of the market. The absence of any defensive positioning into high-yield bonds means investors aren't worried about a credit event or downgrade cascade. This is what you want to see after a string of tech-heavy rallies. When speculation runs hot, credit should remain quiet unless something fundamental breaks in the corporate sector. Fear is receding as UVXY drops 2.73%, VXY slides 1.79%, and VXX falls 1.51%. This inverse relationship tells me volatility expectations are normalizing rather than spiking, which is healthy for a market that's already gained substantial ground this year. The tech news flow, from STY versus QQQ, which ETF looks best, to Kevin Warsh comments send shiver down investors' spines, is creating just enough chatter to keep attention focused without triggering panic selling. Fear isn't dormant, but it's not driving decision-making either. Investors are executing with purpose rather than reaction. The engine sector tells the real story here. SMH leading gains at 3.75% as tech hardware and AI infrastructure components surge on renewed interest in physical implementation. IWM small caps up 1.08%, I industrials up 0.13%, showing this isn't just a mega-cap phenomenon. RSP and Korea are holding steady with minimal moves, indicating the market is selectively choosing where to deploy capital rather than broadly rotating. The AI headlines about owning the whole trend at once are translating into actual positioning in companies that build the rails for artificial intelligence, servers, networking, compute, infrastructure. Safety is seeing selective rotation, bond up 0.38%, and TLT gaining 0.52% as investors extend duration rather than flee to safety broadly. GLD down 1.42% and XLP dropping 0. 69% shows money is leaving traditional defensive hedges for something more targeted. This matches the broader theme. When speculation has room to run, capital doesn't need constant refuge unless there's a fundamental shift in expectations. The flat treasury yield at 4.45%, with VIX climbing to 32%, suggests investors are hedging volatility exposure through duration rather than sector rotation. A more sophisticated approach that indicates institutional maturity. Today's market tells the story of a bull trend finding new fuel in physical AI implementation while maintaining credit discipline and selective defensive positioning. The spec leaders' broad participation, stable credit spreads, receding fear gauge, hardware-heavy engine gains, and duration-extended safety trade all point to investors who believe this rally has fundamental backing rather than being purely speculative froth. Kevin Warsh's comments about potentially murdering the bull market are creating just enough narrative friction to keep attention engaged without breaking momentum. That's exactly how markets stay alive. That's your Canary Report for June 21, 2026. The canaries are singing in unison today. Speculation has room to breathe, credit remains sound, and AI infrastructure is the real story beneath all the headlines. Stay vigilant on that Warsh narrative, but don't let it distract from what's actually happening. Capital flowing into tangible implementation of artificial intelligence. We'll see you tomorrow.